Hey everyone, Steve here from theturtlefollower.com, and in tonight's video we're going to take a look at the markets. We usually do this on the weekends, but I happen to be on a little vacation this weekend, so I didn't get a chance to put everything together, so we're going to take a look at it now. Now, we've talked in the past about the markets and really holding this trend line. You can see this trend line here that I've highlighted a little bit thicker. We actually ended up closing below it on the 26th, which was Wednesday, and then on Thursday, and then since have rallied off of those lows. Okay, so the concern at this point is this a little bit of a lower high? And it's very possible that it is. It's also very possible that we're putting in maybe a W pattern where we came in and double bottom at this 2032, but you can see this 2032 level is extremely important here on the S&P. Now, if we go ahead and we're actually going to just clear out everything that we have here, and we're going to take a look at it with a fresh set of eyes. And again, we'll draw that same trend line in here, okay, that connected those old lows. And now I also want to show you that we may just potentially be in a longer term consolidation. Okay, so where we had a consolidation back here that we broke out of. All right, now we came up, came back down. This very much could be a potential lower high, and then if that's the case, we're still looking for this level here to hold. Okay, you can see it's been tested a couple times, this 2035 area, but ultimately looking for that to hold. So right now we're back above the trend line, back above the 50-day moving average. We didn't spend a lot of time down there, and we haven't really done that, we haven't really spent a lot of time below the 50-day moving average in the past month and a half or so. Now ultimately the market has gone sideways. Okay, and if we look at the weekly chart, it's even more evident. You could see that we've had this breakout, but you could see that pretty much since the end of last year, we've gone sideways. And now this could be a high base, or if we end up breaking down below 2035, I think we could come down and test this 1960 to 2000 level. All right, that's my opinion on the S&P moving forward. Ultimately, you have to see which one breaks first. Either this 2115 up here at the highs, or 2035. Until one of those breaks, just treat it as if you're in a sideways market. All right, because that's exactly what it is. It's range bound, and at this point it's not really doing much of anything except going sideways. So there's still stuff to trade. All right, ultimately still stuff to trade out there, but it is a range bound market. Now on the other hand, you have the Nasdaq, which broke out of this longer term consolidation. All right, it moved sideways, broke out, and now came back and tested this breakout level, this 4312, twice. You could see here again, maybe this is just putting in another kind of stair-stepping its way higher, putting in another consolidation. But again, over 4478, everything looks good. Under 4312, not so much. Again, looking at the weekly chart, you can see here is that first consolidation, and now here's the second one. Okay, so again, we still have plenty of room to the downside, down to this 20-day moving average, but for right now, we are in a sideways market. Now, I thought last week after breaking out, I really thought we were going to push through this 47 or 44.78. We didn't, and ultimately that's fine. Like I said, there's still stuff to trade. Nothing changes based on the way I trade. It's just understand the fact that the market is not helping your situation. If you're looking to go long, it's really just a choppy market. So you may get stopped out a lot easier. You may end up taking a position on a breakout and a couple days later being stopped out. So just recognize that. If you want to reduce your size, you can do that. I usually don't reduce my size, only for the reason that when I do find ones that are winners, I want to be in them, and I want to be in them as much as possible. All right, but just understand that the markets aren't necessarily helping your cause if you're looking to be long or be an over dramatic bull, I guess, at this point. Right now, it's really just looking to go sideways. And you can see here, if we redraw the Dow as a channel, that we are in a bit of, maybe it's a bear flag, maybe it's just a small little downdraft, but we are ultimately, again, going to the weekly chart, we are ultimately in a range. Okay, so nothing out of the ordinary right here. It's just the fact is we haven't had this type of action in a while. We're so used to the markets going up and up and up, and for right now they just want to kind of go sideways. So as far as the markets go, you have these levels to the top and bottom. For the Dow, it's like 17,500 really wants to hold, and when you start seeing some of these levels fail, like this 50-day moving average and this trend line, then it's a cause for concern, and just understand that the markets may go down, but there's ultimately going to be some trades that will buck the trend and move higher, right? And the strongest of everyone has been this Russell 2000. Okay, you had the 2 big down days, and ultimately now right off the 50-day moving average, right off the trend line. So nothing wrong with the Russell right now. You could even take these drawings out, but ultimately that's just a pretty stock in an uptrend. You could, if you're long it, you can go ahead, trail your stop up to 1221 if you're in the IWM or something along those lines. If you're in the futures, good for you. But ultimately, 1220 is the area that you'd want to trail your stop to. So you can look at these any way you want. Some are setting up better than others, but ultimately they are range bound. So understand that they're range bound. Understand that it's not going to be smooth sailing to the upside, nor is it going to be smooth sailing to the downside. You're just really going sideways, so it's going to be a lot of choppy action, and until one of those levels break to the upside or downside, just treat it accordingly. Okay, so that's it for tonight's video, guys. Hope you enjoyed this one. Sorry I didn't get it out to you a little sooner, but for right now, just treat the markets as they come, and we'll continue looking for trades in the next coming days. All right, members, head on over to tonight's strategy session. Again, taking a fresh look on the portfolio, going over a few mistakes I made last week for whatever reason, and we're going to take a quick look at our new watch list for this week. So hope you guys get over there and check that out. Anything else, please leave a question or comment below in the comment section, and I'll be happy to answer it. Again, thanks for watching, and we'll see you tomorrow.